So we'll start with Tesla, just one company today. We all know, right, after the earnings release come out, the share price just shoot up, I think about 20%, right? If you look at the past 5 days, it went up by about 23%. But if we take a step back, right, just look at year-to-date returns, actually Tesla returns is not even 10%, it's only 8.36%. So if you compare this against other Magnificent Seven, right, actually Tesla is the ones that's still lagging. The red line is Tesla, which actually lagged for the first half of this year, and it was like way behind the rest. The rest, for example, like Nvidia is like going up to the moon, and then Meta also doing quite well. The rest is like Amazon, Apple. I think these are quite close to S&P 500, and then Google and Microsoft actually is the one that's a bit lagging. But Tesla was, before this 20% jump, it was like compared to the rest. But after this 20% run, it caught up a bit, but still behind the Magnificent Seven. Okay, then let's go into the earnings release. So the headlines numbers, right, if we just focus on two numbers, the earning per shares, 72 cents, this is the numbers, and then compared to the consensus estimate is 58 cents. So it beats on the EPS, but on the revenue, right, it's 25.18 billions. It's actually less than market consensus, meaning that it's not a dual beat. It beat on the EPS, but didn't beat on the revenue. On the revenue, usually shouldn't be that much of a surprise because 2 days after the quarter closing, right, they will announce the delivery numbers, and then from the delivery numbers, we can guess more or less where the revenue is. But it is not the full picture because that's just the auto business, right? So there's still the energy business, the battery business, and so on. So those are not inside. Battery business, the energy business are doing quite well. It's just that still on the revenue front, they didn't beat. But still the price went up, right? We will get into the details. So let's go into all the important fundamentals metrics here. The first one I'm looking at is the quarterly revenue. So as you can see here, 25.18 billions revenue. This is quite close to the peak, not to say peak, it's almost the highest revenue, not the highest one. So the highest one is probably last quarter. As you can see here, it's quite clear from the chart, right? The revenue actually went up a lot from 2016 to, let's say, 2023. And then after that, it's already stagnant for quite a while. So, and then if you look at the last 12-month basis, this is like rolling 12 months, right? So rolling 12 months, it will smooth out the volatility between quarters to quarters. So you can see that there's a huge run from 2021 here, 2021 to 2023. And then after that, it's like kind of flat now. So now it's 97 billions revenue business. Then as this chart here is showing the CAGR, basically it's just comparing the quarter 1 year before. So it's a year-over-year revenue growth. So during 2021 and 2022, you can see that the revenue went up like crazy. It's, let's say, like between 40% to 100%, right? So it's like super high growth companies. People extrapolate the revenue will go to the moon. And then after that, since 2023 and then 2024, we have seen that the revenue growth already slowed down. Almost like not much growth in the recent quarters. And then now the latest quarter, you've seen that there's some picked up in terms of the revenue. Right now is about close to 8%. When people say that, oh, Tesla, high growth company, maybe they haven't really paid too much attention to the fundamentals. As you can see here, let's say a companies with the revenues CAGR of 8%, definitely that's not considered a super, or not even considered a high growth companies. But hope that this is just temporary because we all know that this revenue growth slowed down partly also because they reduced the car prices. So that actually affect their revenue growth, right? So hopefully this revenue growth can come back later. So basically I'm saying that just because the growth slowed down doesn't mean that it cannot pick up again. So all this depends on how many cars they are able to sell in the future and also the margin. Then that one just now is the revenue, and of course revenue are driven by two things, right? One is the selling price, the other is how many cars they sell, and the third thing is also the other segments, basically their energy business and others, right? So but if we just focus on the Tesla delivery number, you can also see similar pattern, meaning that even on the number of deliveries, right, also it gets stagnant for quite a while already. You don't see like extrapolations, right? Let's say from 2020, you just extrapolate, right? Right now, by right, it should be 600 or 700,000, but yet we are stuck at below 500,000 of deliveries per quarter. It is a decent number. It's just that it is much lower as compared to the growth that many investors were expecting. So this this is the delivery number. And then now let's go into more details and looking at the margin, okay? Because I think what happened to the share price since it peaked, right, is that they keep on cutting prices almost like every quarters there are news, right? Because they cut prices on different models at different time, and then sometimes they cut prices on different regions at different time. So sometimes it's also quite hard to follow all this news. After a while, kind of getting a bit numb already. Like, oh, okay, price cut again, and then sometimes they it's not like keep on cutting price, right? Sometimes they also adjusted the price up. So it's a bit hard to follow. But for those of you, let's say if you are like me, I don't follow that closely in terms of their pricing. I just know that, let's say if their inventory built out, they have to cut prices. Let's say if the inventory didn't build out as much, they clear up the inventory already, they will adjust the price up a little bit to control. So it's basically to control the inventory and then make sure that all the cars that they manufactured is able to clear out. Right? So basically they're using price as a way to manage the inventory, right? So for me, I don't monitor that closely. But what I can do is just monitor all the the headline numbers, the big numbers, right? Basically the overall companies, what's the gross profit margin. Okay, two margin we'll look at basically. One is gross margin. Gross margin means that you just look at the total revenues, right? And then you just deduct the cost of goods sold. So there are still quite a big portions of expenses not factored in the gross profit. Say for example, let's say like Elon's salary, for example, or this management salary. These are the expenses that is not tied to the unit sold. So these are not included in the gross margin. The net margins or the EBIT margin, that one will include the rest of the expenses. So you can see quite clearly, like just look at the gross profit margin. It peaked around 2022. Remember 2022, that was the year around when they have so much demand on the cars because other automakers, they are having supply chain problem. They can't come up with cars. So Tesla, even their second-hand sales price, right, is very, very high. So even if the price they set to a very high level, still there's so much demand on Tesla cars. So that was when they are able to charge higher prices. Since the peak, right, around like let's call it 2023, they keep on announcing cut in prices. So you've seen that the profit margin came down quite a fair bit from, let's say, 28% down to below 20%. So when gross profit margin, right, it needs to be high enough so that you have enough gross profit so that you have enough money to pay all the other expenses that's not covered under the gross profit margin, right? So when these numbers dip below 20%, actually it was quite worrying. Like we don't know how low it can drop. Let's say the 20%, if it dropped to 15 or 10%, that's really, really bad in terms of their financial, right? But the good thing is that at least we have seen the gross profit margins drop to, let's call it like around close to 18%. That was 2 quarters ago. That was the low already. And then there's a small picked up in terms of the gross profit margin last quarter. And usually when you have 1 quarter of, like reversal, right, people are still skeptical about it, but you follow up by another increase in profit margin. So it seems that the market, at least the market, is convinced that yes, there's a recovery now in terms of their margin. At least the prices have stabilized, and then maybe also you can just extrapolate this based on the Fed cut in interest rate, right? Basically, Fed cut interest rate is cheaper for financing, and then for cheaper financing means that Tesla, they can check out their prices a little bit. So at least the profit margin, gross profit margin, will stabilize from this point onwards. That's good news. Let's go to the EBIT margin. The reason why I didn't include the net income margin, right, was because if I look at net income margin, sometimes, especially when we look at the quarter by quarter numbers, right, there will be some noises. Say for example, maybe it's Q4 2022 or Q4 2023, there's a big increase. That was because there's some like reporting related to tax. So there's a huge spike. But when I look at the operating margin, I don't see the huge spike, right? So that's why I know it came from the tax. So sometimes I think here we just focus on the EBIT margin so that I can take away the impact coming from the tax, which is nothing to do with their operating, right? You can treat this EBIT or earning before interest and tax. You can treat this as like let's call it operating margins or something that's close to net income, just to have some idea on whether all this gross profit, right, is able to translate into like net income. So at least we have seen the same pattern here. There's already 2 quarters of recovery. Margin is increasing. Definitely good picture to have, especially given that the huge price drop over the past 1 or 2 years. That was really the concern about the margin, right? So once the biggest concerns is getting away, there's a reversal there's a recovery in terms of margin. That's why shareholders or especially those who short the companies will get a bit cautious now, because when this margin continue to go up, right, their financial will get a lot better. That's why I think that's the good picture to see. Okay, this one is operating income. Just to show you this chart to contrast, the period around 2022 and 2023, you can see that there's a 3.5 to 4 billion numbers. This is quarterly operating income. So the latest quarter, we are still not at the historical high operating income, but you can see that the jump in the operating income, right, to 2.7 billions. That's quite a decent jump in terms of the numbers. And then the last one that I would look at, sometimes, when companies, they have all the gross profit and then even minus all the fixed expenses, they arrive at the net income, right? You can see the net income, but does it mean that all this net income you can actually, like pay out to the shareholder? Because for companies like Tesla, right? Or let's say if you follow companies like that are invested, for example, like TSMC, sometimes even if you see the net income, doesn't mean that you shareholders can get the money, because a lot of all this money will need to be reinvested. Say for example, for Tesla, they need to put on the money into capex for expansion and so on. So if you have too much capex, right, then you don't have free cash flow. So here, just to make sure that when we look at all the operating income, everything looks nice, we still need to look at free cash flow to see whether there's positive free cash flow or not. Positive free cash flow means that after even deducting the capex, they are still able to generate cash flow. And technically, all this cash flow, right, if they want, they can actually pay out to shareholders, either using share buyback or even pay out in dividends, right? But yeah, in Tesla case, they are not paying dividends. I'm not aware that they are paying out any share buyback at the moment, but at least we have seen some positive free cash flow here of about 2.7 billions per quarter. And the peak, right, is, let's call it like about 3.4 billions. That was around end of 2022, and hope that this free cash flow 2.74 billions, if the margin continue to increase, if the unit volumes continue to increase, it can go up to 5 billions and then continue to scale from here. Okay, this is the free cash flow number. And then free cash flow, sometimes if you look at the previous chart, right, there's a lot of volatility from quarter to quarter. That is because when it comes to capex, it is not a continuous smooth increase in terms of the capex, right? Sometimes things are a bit volatile, and if you look at the rolling 12 months, right, or trailing 12 months, right, you can see at least the trend, whether it's going down trend or going up trend. So you see, it's before they turn profitable, right, there's a trend of more negative free cash flow around 2018. That was before they reached the volume productions, right? So that was 2018, and I think those period they also have a lot of problem with Model 3 productions manufacturing. After that, once they sort out that problem, right, then you can see that the free cash flow, there's a increase in terms of free cash flow from 2018 up until 2022 or 2023. And then after that, with the price cut, it come back down again, right? Now we are going to see a recovery and hope that this number will continue to go up and it's another wave. Because remember, as long as they are able to scale their manufacturing, they are able to cut costs, make their manufacturing simpler, that will actually make their product even more competitive as more customers buy their cars, right? Once they achieve volume productions, then these things, right, can go up a lot more. Because remember, right now in terms of their net margin, right, it's currently just about, you look at their EBIT margin, let's say from 11%, right, you only need to go to, let's say, like 20%, right? That's like twice. Suddenly the profit can double. So and when profit doubles, free cash flow can even more than double, right? So I think this is why I think the number of free cash flow margin, this is important metrics to look at. All right. Now, I think when we talk about Tesla, people are getting very, very opinionated, and you will basically see two camps, right? One camp is like those who are very bullish on the companies. They think that this is the AI companies, robotic companies, it will take over the world. That's the bull camp, right? There's also the bear camp. And usually if you ask those who are not optimistic about Tesla, you ask them, why don't you invest in Tesla? Usually the most common answer that you will get is actually the valuation. Because yes, you look at their numbers, their valuation metrics, right? Definitely this company is not cheap. Just look at the forward PE, right? Forward PE of 89 times. What it means is that for every $1 that analysts are expecting Tesla to make over the next 1 year, right? So remember, over the next 1 year means that they already incorporate in the increase in revenue, okay? So you are paying $89 of price just to get that $1 of forward earnings. So definitely this is not a cheap company based on traditional metrics. The question is that, can you justify this 89 times PE, right? Usually there are two ways to justify this. Number one is that you think that the margin, today's margin, right, is suppressed for whatever reasons. It could be because the price, there's so much potential for them to increase the price later. So as we increase the margin, then your earnings can, let's say, double, right? If the earnings is doubled, instead of like 89 PE now become 45 PE, then it become a lot more reasonable, right? That's one, the margin part. The second part is basically the growth, because say for example, right now 89 times PE. Even if the margin is constant, right? But they are able to increase revenue. Let's say like 30% every year, right? 30% growth in revenue means that their earnings also increase by 30%. Actually, it could be more because of the operating leverage. So if you can repeat that like 1 year, 2 years, 3 years, right? As the earnings increase, right? And assuming the price just stay the same, what it means is that this PE will contract. Okay, the valuation metrics the valuations can contract just because the earnings can increase. So that's why we have to pay attention to those two metrics, whether the margin can increase and whether they are still in a growth phase. We'll get into these two in more details. And then one thing to mention is also, if you look at the valuations metrics, the 89 times forward PE, if you compare this against other Magnificent 7, right? If you buy Google, you're actually buying at about 21 times forward PE. Meta, 25 times. Apple and Microsoft, about 32. Amazon, about 36. And even Nvidia, the so-called 10x, super overvalued companies, is at 42 times forward PE. So you can see that the 89 times indeed it looks very expensive on the surface, right? So let's get into those two details, right? I think the margin I've discussed quite a fair bit. EBIT margins of about 11%. What can increase that 11% to, let's call it like 20%, right? I would say there are two things, right? One is whether the interest rate cut will continue. And as long as that continue, I think in terms of their margin, they are able to at least increase it, okay? The second thing is whether they are able to continue to scale their productions. As more and more scaling continue, that will actually bring down their unit costs, and from there they can squeeze more margins. But of course, if they continue to, let's say if they are able to squeeze the margin and then they continue to pass down to the customers, right? Meaning that they are continue to lowering the price, that is definitely good for the revenue growth. But in terms of margin, it might not increase as much, right? There are a lot of balancing things that the managements need to take into considerations. But here in this chart here, I'm showing the EPS forward 5-year next 12 months growth rate. What it means is that the analysts, right, they are projecting the EPS growth, okay, over the next 5 years. And sometimes for those high growth companies, you can see that actually the analysts, right, they really believe that the EPS will grow. And you can see quite a high numbers on these companies. In fact, even for Tesla, if you just look at 2022, actually analysts are expecting, something like 40% kind of growth rate. EPS growth. So EPS growth can, because margin increase, can also because the revenue growth, right? But anyway, they are thinking that the EPS can grow about 40 to 50%. Right now, this number is about 14%. They are not having a super high expectation on Tesla. So you want to say just because the growth will be high, that's why the 89 times PE is justified. That one also kind of like not valid, right? So then the question here, right, that I wanted to ask is that why the valuation is so high? Why 89 times PE? What are the investors are betting on? If you watch the recent event, and also you just reading the transcript, right? Actually, this is also very, very clear in terms of what are the investors betting on. So the answer is this car here, right? The Cybercab, 2-seater vehicle designed for autonomy. So I think now for Tesla, right, it's very clear that the company is heading to like a single direction, meaning that let's say if you work for Tesla, you don't believe this autonomy is a thing, right? You better just leave the companies, because the companies center around Elon, and Elon's just have a very single focus in terms of the company directions. That's all about the autonomy, meaning that they're self-driving. It is not just something like good to have things. It's not like, okay, I'm a car company, I'm selling cars. This car is super nice, super high accelerations. By the way, the FSD is just a good to have feature. It's no longer that kind of company. Right now, I think from Elon's perspective, right, they have a very, very clear visibility in terms of the autonomy, meaning that they see a roadmap of getting this autonomy done in terms of their FSD eventually it will be completed. The question is always when, right? Because for those who are eager, for those who are super bullish, they might think that, okay, Elon say next year, meaning next year. There are people who are a bit skeptical, think that these things can be done, but I just don't think it's next year. It could be, like 3 years from now, 5 years from now. I don't know. Then there's always the bears that think that, okay, these things will never be completed. This FSD will stay as beta stage for, 10 years, 15 years, or even longer. So basically, they are thinking that Elon is just, come up with a cool story, but not able to execute these things. So that's why there's this thing about autonomy, right? But if you look at the details, right, the company put on such a big shows, right? Meaning that during the event, actually there are, like these cybercab companies fetching people around just to show that, okay, this is the visions of the company. And they are very thoughtful about it. Just from the charging perspective, right? Because Elon did mention that, okay, these companies is really meant for, autonomy only, meaning that they don't have steering wheel at all. And then there's no pedal at all. There's a giant screen. Basically, when you sit on the car, you don't think about driving. You just think about like, I just want to get from point A to point B. And at the meantime, I can watch a movie, do other things, for example, right? And even when it comes to charging, because Elon is having a vision that all these companies will just running around fetching people. So you don't want to have this company fetching people and then still, when it comes to charging, you still need human labor to go and manually charge the car, right? So they actually designed this car so that it will just automatically go to the charging spot and then just use wireless charging and charge itself. After finish charging, it will just go running around and fetch people. So this is the visions that Tesla is setting. So they are very thoughtful about all these small things. Just from here, right, we can see that the company is that serious about getting this autonomy done, okay? So when the company is very serious about this, I think there's some spillover effects to the investors, to the customer, that they think, okay, these things can turn out to be real. And then for those who don't know, this car, right, spacious interior and extra large trunk. Actually, it's very clear that there's only 2 seats here. And then the first thing I saw this, I was like, how come, right? Like, why only 2 seats? Because I'm just thinking of myself, right? Family, have kids. Let's say even if you only have 1 kid, right? So couples with a kid, 3 persons, you want to sit on this car, also cannot fit, only can fit 2 persons. So I was thinking, why not just design four seaters, right? And then the answers that I got is that actually for most of the cars running on the road, right, actually most of them is that either 1 person driving or 1 person fetching just 1 more person. So the 1 person driving plus 2 persons in a car, right? That's actually majority of the rides. So that's why they don't need that many seats for most of the rides. And then second thing is that, remember, let's say if you call a Grab, right? You want to go somewhere, right? And then the Grab come. I don't know about you all. I'll say that most people actually just naturally sit behind the drivers. You don't even think about like sitting in front. In fact, quite a number of drivers, they have ton of stuff at the seats beside the driver's seats, right? And then they wanted you to sit behind. And if the behind seats, the 2 seats, right, those are the one that's for the customer, right? Actually, even for the cabs today, 2 seats is the standard, right? It's just that, let's say if you need 3 people, then no choice. After you fit in the 2 seats behind, then 1 person can sit in front. Those are optional. But still, for most of the rides, right, they only need to cater for 2 people. That's why these things, you can see that it is designed such that if the autonomy is not completed, right, meaning that this project, this cybercab cars, right, they cannot just do some adjustment at a steering wheel, then call it like, okay, this car they can still launch it. It's not like that. This thing will be a complete failure if they didn't get the autonomy completed. So that's why I would say that it is like kind of like all into full self-driving, all into autonomy. So that's the vision that they have. So all effort, all spent on just one direction. That's why, I think customer also, they feel like, okay, I'm a bit convinced now, like these things can be done. Because if not, right, the company, why would they, put out a big shows to say that all this can be done, okay? So then we cannot just, listen to the story, right? We need to, go get into more details and see whether these are true. Like what are the supporting points that at least there are other data points to show that there are progress when it comes to autonomy. Okay, the first thing, right, is that I'm not sure whether if you follow the full self-driving in terms of their versions. Right now, they are at versions 12. I think it's 12.5. That's the latest one. It's still a supervised FSD. So you can see that this version 12, right, is already a big step up in terms of the model where it is end-to-end neural kind of technology. I'm not expert in this area, so I won't go into that details. But for those who are interested, feel free to go to YouTube, see those who, like test drive versions 12.5, look at the capability of the car, see the car is able to steer itself in a situations which is fairly complex. So they are able to do that, right? But still, this is, I wouldn't say they are ready to be, become unsupervised. But remember, 12.5 is still FSD beta, right? So all this, right, I think it's not, don't look at it as in like today's capability. You need to look at their capability, let's say 2 years before, 1 year before, and then now, so that you can extrapolate in terms of their progress, the quality of the model, the capability of the FSD, all those things you can map up the progress, right, the improvement, so that you can have an idea like when these things is ready to become unsupervised and can just, drive itself and become like autonomy 100%, right? So at least we can see that there's a lot of mileage driven under using this FSD versions 12 already. There's a good progress here. And then the other thing is that if you think about Tesla approach when it comes to autonomy, right, they are using vision only approach. So basically, it's like 8 or 9 cameras, taking in that as a sensor, and then from there they use the brain, meaning the model will just come up with output and then steer the car, right? So all these things, just because they didn't use lidar and they use vision only, so it's not so easy to drive based on sensors that is only vision, and so they have to rely on a powerful brain so that they can drive itself, right? A powerful brain means that they need to have a lot of all these GPUs to help train their model. We can see there's a huge increase in terms of the capacity, the training capacity, right? So even now, let's say like there's a huge jump just in this quarter. September numbers is, let's call it about 62,000 equivalent of H100. And then they say that they are going to get to close to 100,000 by end of the year, right? So you can see that it's not just about all this, like storytelling. In fact, they have spending huge dollars, like a huge amount of dollars into all these GPUs to make sure that they have enough training capacity, to make sure that they are able to build the necessary model for their self-driving technology. That's why I would say that this one just, it play around, it gel well with the story that they're telling people. It's not like I'm keep telling people a story and then on the other hand, what about the training capacity? Do you have enough all this GPU to train? So definitely they need all this, right? And you can see if they don't think these things will work, right? Why would they buy so much GPUs? These are very expensive GPUs, right? Means that I think they think that all this, right, together with better hardware for sensors, together with better or more capable training capacity, all these things, it leads to a progress that they believe they will solve all this in 1 year, meaning by end of next year. That's Elon's word. But even if you don't believe it is going to be done in 1 year, do you want to bet that it cannot be done in less than 3 years? So I think that's the questions that you need to ask yourself whether you want to, believe or not. Let's go to like just 1 or 2 things that I find quite interesting from the earnings transcript, which is related to autonomy, because I think whether you want to, believe on the thesis or not, I think the autonomy is just such a big part that if you don't think this will work, right, you shouldn't be an investor. So that's my takeaway from this. I think this part, right, is talking about the smart summon. So they actually call it actually smart summon. So this is basically they press a button and then the car at the car park, it will just drive itself to you, right? So this is already working. So I think in Elon's word is that it gives you a taste on all this autonomy, right? So it's not just like, it works, it doesn't work, 50-50 kind of things. It is something that actually works, right? And then Elon also mentions that there's already a ride-hailing app that they are developing. And then he said that you can request a ride at the Bay Area. So I did some, like fact checking on this. It seems that this is real, This is not like some joke that he told. It's actually real that they have been developing this. It means that once this FSD is done, right, basically they will have an app running, and then basically they have cars running around fetching people. So I think after the announcement, I think this earnings call, right? I think Uber price also affected because basically Tesla will become Uber's competitor, right? So that's something that's interesting to mention. And then the other thing is that Elon basically say a lot of things about like their FSD. What he's trying to say is that it's already quite good in terms of their FSD. They are not as good as being unsupervised FSD at this moment, but they've seen the path towards that. Okay, so and for Elon's, I think his bar, right, is that we are measuring the FSD capability against human, right? So let's say if you are as safe as human, that is simply not enough, because we all know that human, in terms of the capability to drive car, isn't as good, because people, human will get sleepy behind the wheel. So I think this one is quite dangerous. But for FSD, as long as they can reach to the stage of like, equivalent to human driving skill, that means they can, over time they can become 2x better, 5x better, 10x better. And once it become like 10x better than a person, right, than a human, right? So if you don't allow FSD to drive, it is actually more dangerous to continue to let human to drive, right? Because you can just rely on FSD, and then FSD is 10x safer. Okay, so that's why they take a human driving capability as the benchmark, right? So once you reach that, we are talking about 10x, 20x, 50x of in terms of the safety. Naturally, all this FSD self-driving, it will be on the road now. It doesn't make sense for a regulatory to block it just because it is like like not 1,000 or 10,000 times safer than a human, right? You only need it to be like 10x, 50x. Then it's very hard to say that, okay, these things shouldn't be on the road. So I think that's something interesting to mention, because sometimes if you read too much of all this media, right, they have quite a biased view on anything related to Elon. But if you're just listening to all this earnings transcript, you can see that actually when it comes to progress, they are making progress. In terms of the quality of the self-driving, you can actually see for yourself. Just go to YouTube. So you can judge from there whether they have good progress or not. And then from there, just extrapolate a little bit, see that whether you believe these things can be done or not. Because I think that, just imagine that if this FSD can be done in like 3 years' time, right? I still think that this company is companies that you want to be invested in, because once they solve it, right, the business models will be completely different. It will not just be another car company anymore, right? You'll be, just keep on churning out cars, and then all these cars will be on the road fetching people. They will be, like, take over the business of Uber, Grab. It will be completely transform the entire company once these things is done. The question is when. I think that's the biggest question. That's all about my sharing today. I'll go to the comment section, see any questions. Who want to chit chat here, let me know. And then if not, I will just close today's sessions. Okay, from Chiwi. Tesla is one of my bigger allocations in my portfolio, up 52%. Congrats. To the moon when robotaxi come to fruition in the next few years. High margin energy business too. Oh yeah, on energy business. Okay, again, this sharings is just about the, like coming up with some charts, talking about autonomy. There are many things that we can cover that I didn't cover. For example, energy business is definitely one. I think I have seen the numbers is very, very impressive. And then in terms of the margin, it's also quite good. So I think this is definitely something that is overlooked by quite a number of investors. But I would say, for me, energy business is still a relatively small segment of the business. Because even if, let's say I take this autonomy out, right? Just look at the energy business and try to project a decent growth rate on the energy business. Try to project a nice margin on the business and try to justify whether it can get to 89 times of forward PE. I think it's still a stretch. Yes, it can help to justify a bit, but still, this company as of now, or even if you project 3 years, 5 years down the road, I would say that the automakers segment is still the largest part of the business. So energy business is something like good to have for now. It can, of course, it can continue to grow. Let's say until let's say 5 years, 10 years from now. I'm not saying that the energy business is small. I'm saying that if you just look at the revenue today and just look at project their revenue for next 3 to 5 years, majority of the sales still come from the auto business. So that's why when we analyze the company, we should still focus on that piece. But there are many things that you can talk about when analyzing the company. Energy business is definitely one. And I didn't mention about the Optimus, right? So the robotic business is also one thing that can be big. And that one, I think you need a bit of imaginations, because right now, right, when it comes to Optimus, their capability isn't there yet, because I think the demo they're trying to do where Optimus is serving drink, all those things, I think it's quite clear that there are human operating behind. It's not fully autonomous as of now, but you can see that what are they focused on, right? To me, what are they focused on is the dexterity of the hands, because I think based on Elon's visions, when you want Optimus to be helpful, it cannot be just a giant machine walking around, right? It needs to able to do things. And let's say if you just want it to be a helper inside a household, right? You want it to do things. Definitely, the fingers is the important part, the hands part, right? It needs to do things, right? So I think they are like focusing those. And then at the same time, I think the autonomous part, I think, will come later, because all this it relies on the brain, right? It relies on the advancement when it comes to the software side, meaning the brain part. I think that one will come slowly. Maybe it will take another 3 to 5 years of development to see a profile use case for Optimus. But still, this part of the business, right, can become like big. It's just that you need to look far enough. It needs to be 3 to 5 years and onwards kind of things. But at least you have seen, right? You can imagine the world where when you go to bar, and then let's say it no longer humans serving you drinks, but robots that's serving you drinks, right? I think it's maybe, let's say, before this demo, things like this is a bit like, wow, we are thinking maybe it's like 20 years down the road kind of things. But after the demo, you can feel that these things, right, is definitely coming, because in terms of the machines, they are able to move around already, right? So it just need a bit more training in terms of the movement, the autonomous parts. The robots needs to understand your intentions. I think once you have that, right, and these are the things that is that you can have step-by-step kind of developments to make it work, right? So we're talking about 3 to 5 years times, and it will be something that is useful, and they can sell these things and generate revenue. So I don't think it needs like very hard imaginations. Not that hard, I would say. Question from Stewart. Personally, would you be adding more Tesla holdings if the price drop? I think right now the price, right, like I mentioned, the price is about 89 times forward PE. I think Tesla I added already. So that's why I think for now I am not adding. So actually, when it comes to my portfolio, I'm getting a lot more cautious at this point, given that valuation is getting quite high. Not just Tesla, it's overall market. So that's why I've been saving a bit of cash at the moment. So not adding aggressively for now. But let's say like the question is asking, like, let's say if the price drop, right? The question is how much it drops. Let's say if it dropped to a level where I think it's getting a lot more attractive, then definitely I will add, right? So it's a function between the price and also the fundamentals. And right now I think it's still a bit on the pricey side now. So basically, based on 89 times of forward PE, I think the market is already expecting an increase in terms of their margin. Maybe it's not shown in the 15% that I mentioned earlier, right? This chart here, but I think if you want to justify 89 times PE, I think the EPS, probably the 1 or 2 years EPS is a lot higher. Okay, from Chiwi, not to forget the cost of productions for each vehicle has been falling quarter over quarter. Yeah, actually this point is mentioned by the management. They are trying very, very hard to squeeze, basically to lowering the cost of the car, so the expenses. So they're trying their best to do that. And Elon also mentioned that this is very, very difficult, and whoever able to solve this is the hero, right? This is the not easy to lower the cost, but I think this is very, very important for any manufacturing company, because it's not just to lowering the cost to increase your margin. It's not just that, because if you are able to lowering your cost and your cost is significantly lower than your competitors, right? What it means is that your product is a lot more competitive. And if there's a clear choice for the customers, right, then your customer will just, like die, then you can grab a huge market share, right? And that will be very good, very good for the financials down the road. But for Tesla case, I would say that right now, actually, if you talk about whether they are competitive versus the customers, I think there are two views, right? One is that if you're just looking at the prices alone, right, actually Tesla car is not that competitive because let's say Toyota, right, Toyota Prius versus Tesla, you just compare car versus car, actually Tesla isn't that cheap, okay? The cheapest one is definitely still the ICE car. But let's say if you say, okay, you shouldn't compare like that. You should compare the total cost of ownership. The maintenance of all the ICE is a lot higher, for example, right? And then the saving that you can get by driving EV. And also you can compare to say that, EV, the driving experience is so much better. It's even faster as compared to a sport car, right? So and then the software about the car, the FSD, when you bring in all these things, which is more towards qualitative, you will say that, okay, for Tesla, for all this additional benefit that you are getting and the incremental price that you are paying for getting all these things, right? And you compare like this, definitely it is competitive, especially in the US, right? So that's why if they are able to reduce the prices further and make this comparison become no-brainer, right? Then, for example, even at the same price, right, they are able to give all these things, right? Then I think it's a huge trouble for their competitors, and Tesla will just grab a huge market share, and I think that's the the future that Tesla bulls are projecting. But again, all this there's a roadmap to that. It's just that when it comes to executions, implementation is not that easy. The squeezing, right, it's not like, wow, you just squeeze one thing and suddenly your price drop by a lot, right? It's all the tiny details things that they have to work on. And sometimes working on those, meaning that they need to bring in-house a lot of all these process, do things themselves in terms of like, squeezing the expenses, the margin, right? So it takes time, okay? So that's why we need to be patient on that. Thanks a lot for joining live, and definitely enjoy having this kind of back and forth discussions with you all. And there's a lot of good points given by Chewy, by Stuart. So I think definitely thanks to you all for coming. See you all on the next one. Bye bye.